Craig McMahon is the head of Asia Pac research for Wood Mackenzie, and he joins us now to tell us a little bit about that research. Thanks for being here. What kind of things are you finding out about the demand here in Asia?
Well, there's a huge focus on demand at the moment. I mean, obviously, the big buzz topic at the moment is obviously the oil price, and everyone's very keen to hear each other's projections and how that's going to go. So, looking at the demand side on that, and for many years now, for demand, the world has been largely looking towards Asia, as demand has stagnated, particularly in Europe and to a slightly lesser extent in North America. So over the last 5 years, global oil demand has grown by 1.5% on a compound annual growth rate. And if you look forward to the next 5 years, that growth will be about 1.1%. But of that growth, the vast majority of it is actually focused on Asia. So again, last 5 years, 2/3 of that growth has actually came from the Asia Pacific region. And looking forward again, a very similar level, about 60%, albeit of a lower growth rate, will again be Asia Pacific focused. But there's a few stories within the region which I think are probably relevant to consider. And I guess the most significant one is China. And 2014 was a really interesting year for China and the China economy overall. So GDP in China grew by 7.4% through 2014. But what was really significant was that for the first time, we've seen a decoupling of economic growth and energy demand. So GDP at 7.4%, but oil demand growth only at 3.5%, and power demand growth only at 3.8%. Now that decoupling is really indicative of what we've seen from within the Chinese economy, a real shift in terms of moving from an investment-based economy to a consumer-based economy, and that's had real ramifications in terms of the implications on demand. Going forward, it remains to be seen how much of that decoupled relationship persists. We do expect to see more urbanisation of the inner provinces, which hopefully will produce some form of boost to oil demand, and that's certainly a parameter which I think the world is looking at pretty closely at the moment to see how that plays out. Elsewhere in Asia Pacific, there's also been a lot of growth, and perhaps places like Southeast Asia and of course India as well. We do expect to see the rate of that growth calm as well for a number of factors. One, deregulation within markets like Malaysia and Indonesia will stifle the growth rate. Secondly, there will be greater efficiencies applied within the energy sector. And thirdly, the substitution of oil specifically with other hydrocarbons, particularly gas, being the real focus there, will also have an impact on the rate of growth there. So overall, from an oil price perspective, which has been the real focus, I think, of the event, if you're looking for demand as being the solution, I'm afraid that's probably not going to be the answer to higher prices. Rather, we really need to see some reply from the supply side to try and get us back to those heady heights that we were at previously.
A lot to follow up on in that in that one answer. But just starting with China, is it as China goes, so goes Asia, or is that a separate story from the rest of Southeast Asia or even the rest of North Asia?
I think it's definitely a separate story. The rate of growth within China has obviously been hugely significant in recent years, and we still expect to see growth. I mean, it's interesting to reflect on how the market sentiment changed during 2014 as China slowed to 7.4%, which is still relative. But that market sentiment really shifted, and that was one of the significant turning points in terms of the oil price journey. Prior to that, political instability in the Middle East had probably, given the oil price a bit of a comfort blanket, but that sentiment, that market sentiment, quickly left the concern over politics to focus on the real fundamentals on the demand side, and a lot of that really was driven by the relative slowdown in China. I mean, elsewhere we're still seeing comfortable growth, but obviously very much separate from China. Elsewhere in Northeast Asia, the other thing we would probably call out is obviously Japan, going through really interesting economic times. And again, from the oil demand perspective, the reintroduction or the partial reintroduction of nuclear into the Japanese energy mix will obviously have a downward impact on oil demand.
You said at the beginning that you were hearing a lot of different people trying to suss out everyone else's ideas about where the price is. Are you getting a consensus here as to when prices might stabilize, or is it just every person you talk to has a different vision?
I think there's a broad consensus. There seems to be a growing opinion that perhaps we're kind of bottoming out a little bit. I don't know how much of that's wishful thinking, how much of it's is based on true fundamentals. But I mean, at the moment, I think there's the growing consensus amongst the attendees has been around about the $50 mark as being the bottom of this particular downturn. I think one of the points we were kind of keen to stress during our talk was just to try and keep a sense of perspective. I mean, the drop in oil price was very dramatic and very sudden and very fast, and obviously has very widespread implications. But I think it's also worth just saying, if you look at the oversupply that we have in the market at the moment, we see that oversupply as being maybe around about 1 to 1.5 million barrels per day. That, in the broad scheme of things, is not a huge volume of oil. Also, if you consider the fact that we do see oil demand growing through 2015, we see about 0.8 million barrels per day coming back to the market. So the actual difference between supply and demand is not huge. Also consider to that we will see a supply side response. In fact, we're already seeing a supply side response. So capital budgets have been pretty much slashed across the sector. And the other area that we would expect to respond probably quickest, and again we're seeing this, is very much North America and what's been happening with the tight oil plays there. So a lot of those plays and those drilling contracts are forward planned, maybe 6-9 month contracts. So it will really only be in the second half of 2015 that we'll start to really feel the impact of people starting to draw investment out of that particular sector. And again, only really until 2016 we will actually feel the full impact of that. So at Wood Mackenzie at the moment, we were previously forecasting an oil production supply growth from the US onshore tight oil plays of about 1 million barrels per day for 2016. We now see that as being effectively halved. So we are seeing a real supply side response. We do see some upside to demand, and hopefully, combining those two together, we'll be looking at a more rosy picture through 2016.
A lot of people that we've talked to have said that they're looking at this as a time of opportunity, actually, with the lower prices, an opportunity to pick up the depressed assets and things like that. Where do you see the opportunity for investors in this region?
I guess it's quite difficult to necessarily be really regionally specific on that. I mean, so many of our investors, so many of our companies are global companies, and these opportunities that may present themselves through stressed or de-stressed companies will really be on predominantly on a global scale. What we would say is that the fall in share price valuations of companies has been pretty much, instantaneous with the drop in oil price. So, we would comment at the moment that there's a number of what we believe to be fundamentally strong companies with very, very strong growth projections that are hugely undervalued by the market at the moment. In fact, I think the whole sector is undervalued by the market at the moment. So if you are bullish on oil price and do believe in a recovery in the medium term, then there is some very attractive opportunities that may present themselves within the M&A market. And if you're in a position where you're in a strong cash positive position, then there may be opportunities that you can consider acting upon.
And what kind of questions are people asking you? What kind of information do they want from you at this time?
Well, I guess everybody's really looking to understand how each other are coping with the situation. So who is in the strongest financial position? What is the attitude towards, of investors at the moment? That's really critical. Investors are looking to see, the management teams of the oil and gas companies really respond to the oil price predicament, and that's happened. It's happened very quickly. We can see, announcement after announcement about the cuts to capital budgets, discretionary spend really coming under massive pressure, a likely drop off in exploration activity as people kind of just look to balance the books and try to ride through the storms. So I think everyone's really keen to hear from each other in terms of what's been happening in that space.
All right, great opportunity for networking here.
Absolutely.
Okay, thanks so much for your time and coming in and spending a few minutes with us.
Thank you.
We've been speaking with Craig McMahon with Wood Mackenzie.